Hello everyone, my name is Carla Carderera. I am one of the managing partners at Upfront CPA. And what is the topic on this video? Today we're going to speak about the number one error people or business owners make after tax season. So a lot of people think tax season is done, I filed my taxes, I am done, I am in compliance, the IRS is happy with me because we filed on time and we are done. But that is the number one error that you can make. And you can be a W-2 high earner or you can be a business owner. In both cases, a lot of people, again, say, I filed my taxes, I am done. But that's actually when the work begins. That's actually when you need to start planning for the following year. So tax planning happens during the year because depending on the strategies, you have to implement them now and throughout the year in order to be able to save taxes when you file next year. So please, 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 just because you just file your taxes in April 15th or March 15th, if you're a business owner, it doesn't mean that you are done. This is actually when your work together with your advisor starts. This is super important, and I am very surprised as far as how many people do not do this. Believe me, high earner, successful business owners, this is how they do it. And that's why they are as successful as they are, because they are planners, because they implement these strategies. It's not only a strategy to save and taxes at the end of the year, it's strategies also on how to grow your business. It's understanding your financial statements so you can make other decisions in your business. Should you invest? Should you sell? Should you franchise? Again, planning needs to happen throughout the year, especially before you file taxes, and it should be done with a professional advisor that can help you, guide you through making those decisions. So number one, the biggest mistake people make right after tax season is that they do nothing. Do not do that. Call your advisor. Start planning, start having these meetings. Let's look at your financial statements from prior year. Let's look at your projections for future years to see what can be done this year to get you ready for the following year. So right after filing your taxes is actually the most important the most important time to start planning, and that is you already know what happened the year before. You already know where it could have been improved or items that were actually successful that you would like to repeat the following year. So again, the planning portion, it's definitely evaluating what happened the year before, work on projections for the current year, and start working on those strategies and actually implementing them. So most business owners think that tax season is the finish line, but that's actually when it starts. Again, you should be meeting with your advisor throughout the entire year. If you're going to your tax advisor when it's time to file your taxes, you are already too late. At that time, there's very little to none strategies that can still happen. If you come to us, let's say for 2026, if you come to us in January, February, or March of 2027, you need to start working with your advisor as soon as you file your taxes. Once taxes are filed, people mentally check out, and that's where the problem starts. A lot of people come and tell us, oh, you're an accountant, it's May. Wow, so is the summer your slow season? No, this is actually, we never have a slow season, let's put it that way. We always work with our clients throughout the entire year because what are we working on at this moment? We file our clients' taxes for our prior year. We are already working on the planning and the strategies that we're going to implement this year to help them when we file the taxes next year. So no, this is not a slow time for us as advisors. This is actually when the planning work really, really starts. And once we start implementing, we are working on the strategies at the moment right now, and then we're gonna help our clients start implementing them. So no strategy, no adjustments equals same tax bill the following year. Again, if in your case you paid a lot of taxes in 2025, then And then if you don't do anything for 2026, then guess what? You're going to pay exactly the same or even more than you paid last year. Therefore, if you don't do nothing, if you don't do anything, nothing happens, nothing changes, everything stays the same. So if your case specifically is that you pay too much in taxes, I am sure that you're hurting right now. If the reason you did it is because you didn't implement strategies or work with an advisor throughout the year in order to be able to help you lower that tax liability. So tax season is just reporting what already happened. So if you are a business owner or even a W-2 high earner that only sees your accountant when it's time to file the taxes, as I said before, that time is already too late. Then your advisor or your CPA becomes a tax preparer. All they're doing is filing the taxes based on what already happened. That's why you don't wait until the year finishes to actually go and speak to your advisor, because at that time it's already too late. You need to be working with us or with your advisor throughout the entire year. Real tax savings comes from what you do after you file. Again, we completed the tax filings for our clients for prior year. We already started working on strategies for all of our clients, and we are going to present them to our clients, and then we're going to start implementing them. Don't forget that the strategies are different for everybody because it depends on what the case may be. It may be, again, that you had a very successful business in 2025, but then maybe 2026, based on the economy and everything that's going around the world, maybe your projections for 2026 are different. Therefore, there's a different planning that needs to happen if that's the case. There are still strategies. There are still things that needs to be done throughout the year. But again, depending on the projection and the current events, then those strategies or the work that we do with our clients is going to be different. So the decisions that you make now directly impact next year's tax bill. So again, the decisions that you make now, the strategies that you implement now, you're not going to see the results until we file the following year. A lot of our clients, again, if you're new at strategies, at tax planning, at meeting with your advisors, we see the trend from our clients is that the first couple of years, they are conservative because they're not sure how it works. They really want to get familiar. They want their tax advisor to really get to know them and get to know their business if they are business owners. So and it's okay. It's completely fine to start with maybe smaller strategies, get comfortable with the process, and then you can start making more aggressive strategies that will help you. And again, depending on the strategies that you make, it's going to be the changes that you see when you file the following year. So at our level, we don't stop at filing. We shift into planning immediately. This is where strategy begins, not where it ends. Again, now, after tax filing is done, don't make that error, as a lot of people do. As soon as you file, you already start working with your advisor for the strategies for the current year. And believe me, you are going to see a difference when it comes time to file your taxes again. So high-level tax advisory happens year-round, not once a year. Again, we have to have multiple meetings with our clients in order to make sure, one, that the strategies that we advise them on are working. We need to know if there's any changes that happen. For example, you decided to purchase equipment, you decided to purchase a house. Again, any changes that happens throughout the year, you have to let your advisor know right away. That's why we meet with our clients regularly, not twice a year, not only at the end of the year. It's not that we meet them now and then we don't speak to them again until November. No. We have regular meetings, and I advise you that as soon as a change happens in your business or in your life or whatever the case may be, always contact your advisor right away to let them know, because some of those changes might impact the strategies that are being implemented, or maybe they just need to change. So therefore, meetings have to happen regularly. If you're making over $250,000 a year, you can't afford to be reactive. You have to be proactive. If you only see your tax advisor when it's time to file your taxes, you are being reactive. If you don't have meetings, strategy meetings throughout the year, you're only being reactive. You are not being proactive. And we see this in our clients. We see a lot of clients that only come to us at the end of the year to file the tax returns. When we speak to them about the tax planning and the strategies and things that they can do on their end to help them save in taxes, we actually see them how once they become proactive and work with us throughout the entire year, they will see a difference at the end of the year. It is super important. You have to put that chip in your mind to make sure you have to be proactive, not reactive. If you are being reactive, it's too late. And believe me, you're not saving any money. You're not making, you are not being strategic in your business. And this is not only for business owners. If you're a high earner, same thing. There are strategies that can still be implemented. One of the things that we always tell our W-2 earners is, have you looked at your employer benefit plans? Are you maximizing everything that your employer provides to you to be able to lower that taxable income? Look at your employer benefits package. Make sure that everything that they provide, that you are using it, because that's exactly what it's there for, is to help you lower that tax liability. So the higher your income, the more important timing and strategy becomes. Again, like right now, for example, it's May. You just filed taxes for prior year. Now is the time for the planning and for the implementation to start, because we have to make sure that the strategies that we're working on are going to keep working throughout the year. So planning starts right now, implementation starts right now. We also have to look at your cash flow. What happens if right now your cash flow is heavy, but then towards the end of the year it's not? So that's why you also have to look at your you have to work together with your professional to make sure everything is working correctly, not only on the implementations, but that you have enough cash to run your business and that you have enough cash to input into some of these strategies that do require that. So again, this is a teamwork, and this is a teamwork throughout the entire year. So this is where high earners separate themselves, by planning ahead. Again, and we see that a lot of times some of our smaller business owners, just because they might not be at that high income where they want to be now, they just don't plan. But they don't see that if part of the becoming a higher earner at the end is actually working on these strategies, savings. If you're paying too much in taxes at the end of the year because you're not putting some strategies in place, think that that money that you save can be reinvested in your business to help you grow your business. That's why you don't want to overpay in taxes. If obviously nobody wants to overpay, but you shouldn't overpay in taxes. You should pay only the taxes that are absolutely necessary for you to pay. And think about this, that money that you're saving, you can reinvest it back in your business. You can put it spending on marketing, on sales strategies, whatever the case may be. Just look at that it's definitely beneficial 100% for you, not only because you're not overpaying, but because it's money that you can use to grow your wealth. So filing your taxes doesn't mean you are optimized. It just means that you are being compliant. Again, it's great that you file your taxes in time. If you had to file for an extension, again, that is completely okay as well. Especially when you decide to file an extension, you still need to work with a professional advisor, because you have to make estimated payments to make sure that you're not penalized if you underpaid in taxes throughout the year. So again, that is still another reason why you should always work with your tax advisor. But if you have to file an extension in order to be able to complete your books, to close your books properly, to make sure you're reconciled, to make sure that you reported everything that you needed to report for the prior year, that is more important than filing your taxes by April 15th or March 15th. So think about that. Extensions are not always a bad thing. Actually, we do encourage them for those clients that just need more time to close their books correctly. But still, you need to work with your tax advisor to make sure that you pay the estimated payments correctly, or that you apply the safe harbor so you're not penalized for underpaying in your taxes. But always, 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 always work with a tax advisor, with a tax professional to help you make those decisions as to whether you should file an extension or not. So the right move is to review your return and build strategy excuse me, immediately. Identify what worked, what didn't, and what can be improved. And again, you do this with an advisor, because we have experience. We deal with a lot of clients, different clients, high W-2 earners, business owners in different industries. That's why working with a professional, it definitely will help you make those decisions that you have to make that will help you personally or in your business. Then implement the changes before the year gets too far ahead. Again, that's why now we're working on the strategies. We'll start implementing them right away, and then we'll have these meetings throughout the year to make sure, one, that there are no changes, and one, that the strategies are working. So if you haven't looked at your tax strategy after filing, now is the time. If you're serious about reducing your tax liability, planning starts right after filing, not next season. Again, my name is Carla Carderera, Managing Partner at Upfront CPA. I hope you enjoyed this video, and give us a call if you need any help with your tax planning.